Are you interested in knowing what the biggest risk in due diligence is in note investing and how to mitigate that risk? If so, check out this video. Welcome back, everybody. I'm Chris Seveney with Seveney Mortgage Note Investments, where we provide you sage advice to empower you to take control of your future financial success through mortgage note investing. So today I want to talk about what the biggest risk in due diligence is and an easy way to mitigate this risk. So you're wondering, what is this risk? And it's quality of title reports. Is the chain in correct order? Is the loan still valid? This is probably the largest and most costly mistake that can occur, because if a loan has been sold, via tax sale and it's no longer valid, your investment most likely completely wiped. Unless you can get a judgment, but we're not going to go down that road. Your security interest in that asset has basically been lost. So, how do you mitigate that risk? Especially if it comes at the fault of the title company who you are hiring to do this work. Many of you don't know this, but most of the title companies people use only insure you for the cost of the report they provided. Let me say that again. They insure you for the cost of the report. So if you bought a note for $50,000 and they missed the fact that it was sold at tax sale and you paid $200 for that report, you're out 50 grand, but you get a $200 credit on that title report. I wanted to let that sink in, because selecting a title company is very, very important. So, I probably just scared everyone to death right now. Now the question is, how do I go about vetting these title companies? Because not all title companies, as you can see, are the same. And you want to find out several things about the title company. What states can they pull reports in? What are the type of reports that they pull? You want to make sure they understand that you are a lender, not actually buying the property, that you're looking at the history to make sure the chain of assignments are in order, the loan and mortgage is recorded. Because a lot of times, some title reports, if they don't know that, they're just saying, oh, here's the deed history, and not providing the assignments. So you don't even know if it's a proper chain. So like anything, you really need to explain what it is you want. So like I said, you want to find out what states they're in, type of reports. Now, people will hear terms like O&E report, which is ownership and encumbrance, which is really a report that just shows the current owner and what's on that property. And there's a full title report, which goes back multiple owners, or could go back 30, 40 years, that shows the history over the last 40 years, which is an insurable type of report. And, typically that's what I order, because a lot of loans sometimes may or may not have the title insurance. So really talk to your attorney or talk to the title company on, here's the information I have, how far should I go back from that perspective. But the questions that you do want to ask them, again, are the types of reports you can get. Do they search taxes? That is critical, because some of them will not search taxes, not search additional liens, not search bankruptcy. So you want to make sure those are being searched, because again, they're important. And of course, the last question will be, what happens if you screw up? What if a property was lost at tax sale? What are my rights? Do you have errors and omissions insurance where you will recoup my costs, the cost of the acquisition of the note? What do those terms look like? And those will be outlined in the agreement you have with that title company, which again, most title companies don't even have you sign an agreement. So this is one area where you want to push to have an agreement or get something in writing to understand what are those consequences. It's great that you can just order this report up front, but then if it's not outlined the consequences, you don't have an agreement. Unfortunately, typically, yes, it's many instances only what you paid for that service. So this is something definitely want to look into. I hope I didn't scare everyone on this, but it is a scary topic, knowing that you could lose your entire investment. So thanks for watching. Make sure to hit the subscribe button below. Check out our other videos and get notified when they come out. But most importantly, share some comments below. Let me know what you look for in a title company. What are things you like or dislike about the title business? Who you use, what states are they in? Again, we are trying to make sure everyone's educated to grow their list, so they know who are some of the players in this industry who they can trust and go to. So thanks for watching. As always, check us out on social media. Follow us on the Good Deeds Note Investing podcast, and check out a new membership group at seveneyinvestments.com/join, where we have monthly membership to all of our documents, forms, our calculator. We'll hold webinars and sessions with attorneys, other vendors, also workshops that you'll be able to participate in. So make sure to check it out, and leave us a review on iTunes as well, please. And as always, go out and do some good deeds. Thanks for watching.